The Accounts Payable Control Account is a summary account in the general ledger that shows the total we owe to all suppliers. It is supported by the Payables ledger or purchase ledger, which contains individual accounts for each supplier. The sum of all supplier balances in the ledger must equal the balance in the control account. Everything starts with source documents, such as supplier invoices, supplier credit notes, payments to suppliers. The purchase invoices flow from the purchase day book into the purchase ledger, and payments flow from the cash book. From the purchase ledger, the totals move into the Accounts Payable Control Account. Accounts Payable Control Account is part of the general ledger, and it summarizes the total amount the business owes to all suppliers. The key principle here is that the total of all supplier balances in the purchase ledger must equal the balance in the Accounts Payable Control Account. If the two do not match, it means there is an error somewhere in the postings. Accounts Payable Control Account represents a liability. It normally carries a credit balance. On the credit side, we record anything that increases the amount we owe to suppliers. The main item here is supplier invoices. Every time we buy goods or services on credit, our debt increases. We also include items like interest charged by suppliers or any adjustments that increase the outstanding balance. On the debit side, we record everything that reduces the amount we owe. This includes payments to suppliers, supplier credit notes, purchase returns, and discounts received. Any transaction that decreases our liability goes on the debit side. By the end of the period, the credit side minus the debit side leaves us with a closing credit balance. That closing balance represents the total amount still owed to all suppliers. Most importantly, this closing balance must match the total of all supplier accounts in the purchase ledger. If the two figures don't agree, we know that a posting error has occurred and a reconciliation is required. Let's walk through a simple example of how entries appear in the Accounts Payable Control Account. Imagine that at the start of the month, the business already owes its suppliers £12,000. This opening balance goes on the credit side because it represents a liability brought forward. During the month, the business receives new supplier invoices worth £5,000. These invoices increase what we owe, so they are also entered on the credit side. We were also charged £200 interest by one of our suppliers for late payment. This is an additional liability, so it increases the credit side as well. Now let's look at the debit side, which reduces the balance owed. We made payments to suppliers totaling £3,500. Payments reduce what we owe, so they appear on the debit side. One supplier issued a credit note for £400 because some goods were returned. That also reduces our liability, so it goes on the debit side. We also received £100 in early payment discounts. Since discounts reduce the amount payable, they are entered on the debit side as well. Finally, we recorded a contra entry of £300 with a customer who is also a supplier, meaning we offset their balances rather than paying them separately. This reduces the amount payable, so it also appears on the debit side. When we total the debits and credits, the balance carried down will show how much the business still owes its suppliers at the end of the period. And of course, this closing balance must match the total balance in the payables ledger. The types of errors you can make in the Accounts Payable ledger and the Accounts Payable Control Account are very similar to those in Accounts Receivable. It can be omitted invoices and credit notes, duplicates, understated or overstated amounts. The only difference is that accounts payable is a liability, so the invoices increase the amount owed and payments reduce it. The tables here follow the same pattern you already learned in Accounts Receivable, just applied to suppliers instead of customers. Invoice omitted error is when a purchase invoice wasn't entered at all, so the liability doesn't increase. Accounts payable balance is too low. Invoice duplicated error is when posting the same invoice twice increase the balance twice. Balance in this case is too high. Invoice understated error is when the invoice was recorded for too little. In that case, balance is too low. Invoice overstated is when the invoice amount was entered too high, liability increased too much, balance is too high. Credit note omitted error is when a supplier credit note wasn't recorded, so the liability doesn't fall. Balance is too high. Credit note duplicated error is when the credit note was entered twice, reducing the balance twice, so the balance is too low. Credit note understated is when a credit note recorded for less than it should be. Liability decreases too little. Balance is too high. Credit note overstated error is when a credit note recorded for higher amount. Liability decreases. Balance is too low. Let's now look at the common errors that can cause differences between the purchase ledger and the Accounts Payable Control Account. In this example, we have an omitted invoice error. An invoice for £150 was entered in the purchase ledger but not entered in the Accounts Payable Control Account. This means the purchase ledger shows the full amount owed. This error can actually occur on either side, in the purchase ledger or in the control account, because these two records are updated separately. This is a duplicated invoice error. The £150 invoice was entered twice in the purchase ledger but posted correctly in the Accounts Payable Control Account. So the purchase ledger total becomes £1,300, while the control account is correctly showing £1,150. In this example, the invoice was understated in the purchase ledger. It should have been £150, but only £100 was recorded. The control account has the correct value. Any understated invoice entry makes the balance too low. Here, the purchase ledger has an overstated invoice. Instead of £150, it was entered £200. The control account is correctly showing £1,150. An overstated invoice always makes the ledger too high. Here, a £100 credit note has been omitted from the Accounts Payable Control Account. The purchase ledger correctly reduces the balance to £900. But the control account still shows £1,000 because the credit note wasn't recorded. The control account balance becomes too high compared to the ledger. This error shows a duplicated credit note. The purchase ledger has reduced the balance by £100 twice. The control account only reduced it once, so it has correct balance. Duplicating a credit note always reduces the balance too much. Here the credit note was overstated in the ledger. Instead of recording a £100 credit, £150 was recorded. This reduces the ledger to £850, while the control account remains at £900. An overstated credit note made the purchase ledger too low. In this example, the credit note has been understated in the purchase ledger. Only £50 was entered instead of the correct £100. This means the ledger only reduces to £950, but the control account correctly reduces to £900. An understated credit note makes the purchase ledger too high. In this example, the payment was entered in the purchase ledger, but completely missed in the control account. The ledger correctly reduces by £50 to £1,950, but the control account still shows £2,000. Whenever a payment is omitted from the control account becomes too high compared to the ledger. Here the payment has been entered twice in the purchase ledger, but once in the control account. The ledger reduces by £100 instead of £50, giving £1,900, while the control account reduces by £50. Duplicating a payment makes the purchase ledger too low compared to the control account. In this case, the payment was recorded correctly in the control account at £50, but in the purchase ledger, only £20 was entered. So the ledger reduces too little, showing £1,980, while the control account shows the correct balance. An understated payment causes the purchase ledger to be too high. Here, the opposite has happened. The ledger shows overstated payment of £80 instead of the correct £50. The ledger reduces too much to £1,920, while the control account shows the correct balance. An overstated payment makes the purchase ledger too low compared to the control account.